Hey everybody, welcome back to Chipstock Investor. Today we're going to be talking about Lattice Semiconductor in the wake of Intel and AMD's Q3 updates.
Yeah, Lattice hasn't done so well this year, Kasey. What happened?
Yes, Lattice was a top pick for me this year, and it really hasn't panned out that well.
Not yet, anyways. But as one commenter likes to keep pointing out in all of our videos as of late, this hasn't aged well.
It's a standard comment we're getting.
Some things don't age well. It's okay.
It's true. We'll do a brief overview of the earnings report for Lattice Semiconductor, some changes that they've made since the last quarterly update, and what we're going to do with our Lattice position.
Yeah, this is going to tie in nicely with the AMD video on Monday. If you haven't seen that yet, give that a look. That will definitely be helpful in understanding where we're coming from with our portfolio here.
Before we jump in, make sure you hit the subscribe button here on YouTube, have notifications enabled, and just want to take a quick moment to tell you a little bit about Semiconductor Insider.
Yeah, that's actually where all of our content has now migrated. So we have a lot of articles, a lot of research that is populating over on our Discord channel. Of course, you have the opportunity to ask questions and interact with a community of semiconductor investors and like-minded folks that just like to learn new stuff.
We also have live Q&A sessions each week where you can get your questions answered by us. And often we can't put out a video for every single company that we cover, especially during earnings season, but we do talk about what's going on over on our Discord channel. Check out Semiconductor Insider membership, link in the description below. It's on our Ko-fi page.
Just $5 a month. We've been told it is quite the value.
About 2 months ago, Lattice named a new CEO, Ford Tamer, and that was after James Anderson left for Coherent. And as you can see, we pulled the resume for Dr. Ford Tamer from his LinkedIn page. You can see that he has quite the resume, and we really expect that Lattice is going to change under his guidance.
Yeah, definitely. Been around the semiconductor industry for 2 decades. In his 3rd decade, a lot of experience at a lot of different companies. This is a well-connected CEO. And of course, the most recent position that he held was as CEO of Inphi, which was acquired by Marvell Technology Group a couple of years ago. More recently, he's on the board of directors for multiple companies, including the AI startup Grok. Yeah, this is going to be interesting to see how Lattice evolves in the next couple of years. There was also a change of CFO. Former CFO Sherry Luther decided to leave Lattice just recently, about a month ago as well. Dr. Tamer has opportunity here to completely recreate Lattice if he so chooses. And given the financials that we're about to show you, we fully expect, as Kasey said, that will definitely happen.
Here is the earnings results for this most recent quarter. You can see it's been pretty ugly, especially for the auto and industrial segment. Consumer and comms, also computing, is starting to recover, but revenue came in just above guidance, $127.1 million, which is up 2% quarter over quarter, down 34% year over year. If you draw your eyes to the right side of this slide, in regards to comms and computing, you see that it is up 12% quarter over quarter, but that industrial and automotive down 7% and 51% year over year.
As we've been covering in recent videos, including the AMD video earlier this week, pretty much everything in the semiconductor market, excluding accelerated computing and AI infrastructure, thanks to NVIDIA, is still just barely starting to come out of the bear market that's been going on for the last 2 years, in some instances more than 2 years, for chips. Consumer and PC, this is a smaller segment for Lattice. That seems to have stabilized. Some of the products that they're designed into include Apple's Vision Pro. Remember the Vision Pro? That's been kind of a flop this year. On the earnings call, Tamer also mentioned that some of Lattice's FPGA chips, field programmable gate arrays, are being used in AI inference, on-device AI inference, for example, in some of Dell's new laptop models. So that's good news. But the main problem for Lattice at this point is that auto and industrial segment that Kasey just mentioned, still down 51% year over year. There's just still too much inventory out there because auto sales have been pretty flat at best for most of 2024 thanks to the higher interest rates. Lattice is still helping its customers burn off some of the excess inventory of chips.
Speaking of interest rates, time could be running out to lock in a historic yield at public.com.
Yeah, that's a good point. So here we are sitting at the beginning of November 2024 as of this recording. Had quite the sell-off in the bond market, and that has pushed yields up to 7% on public.com's bond account. Could be a pretty good time if you're trying to lock in a longer-term return from a fixed income portion of your portfolio.
Yeah, if you want to lock in a 6% higher yield with a diversified portfolio of high yield and investment grade bonds, you might want to act fast. Those interest rates aren't going to be around forever. But the good news is it only takes a couple of minutes to sign up at public.com/CSI.
And once you lock in your yield, you earn that regular interest income, even if or when rates continue to decline thanks to the Federal Reserve now cutting interest rates. Check out the link below, public.com/CSI.
But as mentioned, comms and computing, the segment that's starting to recover, is no doubt getting a bump from AI servers. But as Nick mentioned, this is a very small end segment for Lattice, so it's not having that dramatic effect that some of its peers are having with this AI bump.
Now, perhaps this can be an area of really solid growth for Lattice in 2025, but at this point, I think it's safe to say it's just too small to drag Lattice's overall business out of the downturn. So this now begs the question. We've talked about Lattice now for a couple of years here on Chipstock Investor. One of the original reasons we started covering Lattice a number of years ago was that it was taking market share from its two primary competitors, the biggest being Xilinx, which is now AMD embedded, and Intel's programmable unit, which used to be called Altera. They made that acquisition about almost a decade ago. Then it became Intel's programmable unit. Now it's Altera again, and Intel's looking to possibly spin that off as a standalone company. Let's look at the quarterly revenue trends for Lattice over the last 4 years, almost 5 years now.
Yeah, the good news for Lattice is by certain metrics, Lattice is still outperforming Altera and AMD's embedded portion. Tamer reiterated that Lattice is still taking market share in small and mid-sized FPGAs. And as you can see, Lattice has remained profitable even during this downturn.
It has, and that's fantastic. Now you can compare that to this slide that we put together from our friends over at finchat.io. This is AMD embedded, formerly known as Xilinx, in orange, and then Intel's Altera segment in blue. Sorry for the puppy making some noise and appearance here. She's really excited about Lattice earnings as well after that controversial AMD video.
You want to say hi?
She too was shocked to hear that we might be selling our AMD stock for cash before the end of the year. Okay, get her out of here. Now, we dated this back to the first quarter of 2023 for a reason, because on the earnings call, analysts wasted no time asking Dr. Tamer about the competition, and especially in the last 6 months, it seems like Lattice has begun to fall behind in the revenue performance department, has begun to fall behind AMD embedded and Intel Altera.
Yes, Nick, this was asked specifically during the Q&A section, and Tamer had something to say about that. He said, if you track back all the way to Q1 2023, our performance is twice as good as the worst one of these two and 50% better than the other guys. So according to him, Lattice has actually outperformed its main peers since the start of 2023. Lattice's revenue is down about 30% in this most recent quarter, while AMD is down 38% for embedded and close to 50% down for Altera. So good news for Lattice.
And we tried to recreate the charts as best we could here based on what we thought Dr. Tamer may have been looking at when he referred to the graph that he had in front of him. But what's worth mentioning here is the charts that we provide is AMD and Intel's total programmable segment revenues and Lattice's just total overall revenue, because Lattice is that pure play on FPGA chips. But what Dr. Tamer was probably looking at was something more like the small and mid-sized FPGA market overall. As he mentions later on in his response, Lattice only competes in this small and mid-sized FPGA part of the market, and they don't do any system on chip work. They only focus on the FPGA chips themselves. And as Kasey covered earlier this year when she did her update on Lattice Semi, is part of the reason why the company has outperformed on the profit margin front is it's not just because it does really, really well on those small and mid-range FPGAs, but they also bundle a lot of software, especially design software, in with the sale of those chips so that some of its partners can then use that software to do that total system on chip design. So this makes Lattice, if you're looking and thinking about our semiconductor industry flowchart, this makes Lattice a fabless chip designer, of course, but also a participant in IP and a bit of design software as well. So that's the reason for the higher profit margins and the reason why Tamer probably mentions that, yes, indeed, Lattice is continuing to outperform its competitors, AMD and Intel. He's probably looking at a slightly different chart that shows that they are taking market share in this specific part of the programmable chip industry.
But the big question now is how quickly will the semi industry recover in consumer and auto and industrial? We have been reporting it's going to be a lot slower than expected, and Lattice is pretty much saying the same thing.
Yeah, here's a look at the Q4 2024 guidance. Not great. It implies a sequential decrease from Q3. On a year-over-year basis, revenue expected to be down 31%, and then adjusted earnings per share down 59%. Still profitable, but again, another big tumble in profitability. We'll circle back to this at the end and what that means for Lattice Semi stock. A little bit of upside here during this prolonged downturn that Lattice is still managing through. They do have 124 million in cash and investments. That's actually stayed pretty stable throughout the year. And of course, no debt. And they have repurchased $47 million worth of stock so far in 2024 through the first 9 months of the year. All good stuff, implying the company sees its stock as a decent long-term value at this particular juncture. But Kasey, it was asked about the recovery on the earnings call. And Dr. Tamer said it's going to look like a U-shaped recovery. What exactly does that mean?
If you haven't caught our AMD video, check it out. We'll link it right here. But we said this is one of the most important charts that you need to know right now as a semiconductor investor. The shape of enterprise compute, consumer electronics, and the auto and industrial revenue recovery.
Pretty much everything except for accelerated computing.
Exactly. Everything except NVIDIA. We all want to see a very sharp V-shaped recovery, but really what's happening is a much flatter recovery. But as you mentioned, Nick, what Dr. Tamer said is a U-shaped recovery. That looks a little more like this. Unfortunately, we're probably looking at a few more quarters to go of lackluster sales before the more pronounced pickup in the second half of 2025. So a U-shaped recovery means it's going to take a little longer.
Mm-hmm. Yeah, and that could mean very little or no sequential revenue growth, let's say through the first half of 2025. On the Q&A part of the call, he continued to flesh this out a bit for analysts, which was nice of him to give this kind of longer term outlook into 2026. But perhaps by the end of 2025, maybe this time next year, Lattice is able to start clawing its way back to 15 to 20% revenue growth. And then hopefully, definitely 15 to 20% revenue growth by 2026. So the recovery being prolonged, it's getting stretched out far longer than any of us wanted it to. Maybe this is a good sign that this next leg of growth, this next cycle for the semi industry actually can last maybe 2 to 3 years down the road from now into 2027. I think that's the upshot here. This is good, again, for everything excluding accelerated computing, consumer electronics, auto, industrial, and power, communications, enterprise computing, not including AI. Maybe this is a 2 to 3 year growth cycle, a more gradual growth cycle, maybe a bit more modest than past recoveries. But accelerated computing kind of stealing all the cash from the industry. And so maybe this is just a more shallow but more prolonged spate of growth coming for Lattice starting later next year.
So this doesn't really bode well for the stock in the immediate term, right?
Yeah, it doesn't look like it will. So, a couple key points that we think are important to know for Lattice as well as for AMD because of that big embedded segment that they got from Xilinx. And Intel Altera doesn't put Intel in a great place if they're trying to IPO Altera for cash. This is the reality right now. There's no real immediate term catalyst for these stocks, for Lattice in particular, the FPGA pure play. Other than maybe it's just oversold after this Q3 update, but we're not trading the stock. So we're not doing anything with it, but maybe some sort of oversold technical analysis is more your thing. Maybe that's how you use the timing of your entry points. I don't know, but that would seem to be the only immediate term catalyst in our view.
So ultimately, we are excited for Lattice. It has a great foundation on which to build upon. New CEO that is very well connected in the semiconductor industry and will make some probably very good changes at Lattice.
Mhm.
And again, if you have not watched it yet, check out that AMD video. We haven't made any portfolio changes yet, but we may make some short-term adjustments to raise some cash before the year end.
Mhm. Yeah, and maybe just to address some of the comments on that AMD video, we haven't sold. We've had AMD stock and before that Xilinx stock for many years. This decision is being primarily driven by our need to just have some excess cash in our portfolio, or maybe I should not say excess cash, just any cash to speak of in our portfolio at this particular point. But we're not going to do that immediately because we're not interested in selling AMD at a lower price than it should be. And if we did that with Lattice, it would probably just be a short-term thing to take advantage of some tax loss harvesting opportunities before the end of the year. Certainly not dropping Lattice from our coverage. This is an us problem, not a Lattice or an AMD problem, although it's worth noting there are some issues with these businesses because of this prolonged industry downturn.
We flesh all those thoughts out and more over on our Discord channel. Make sure you check out that membership that we talked about. It's a great value. Stay tuned. Make sure you hit the subscribe button. We have a lot more coverage coming your way. See you again soon at Chipstock Investor.